Dear friends, welcome to weekly view on markets. Market mood was positive during this week. Nifty, Bank Nifty and mid cap indices gained while small cap index was marginally down for the week. Charts are showing good strength. Buying is coming at lower levels and hence there is no fear of big correction in the markets. Result season is over and valuations have not gone up despite the rally in last 1.5 months in the market. So we'll look at the valuation metrics in this video. Market valuation has been sustaining at the same level despite rally in the market. This shows the underlying strength in the earnings of the companies. Let us look at weekly performance of indices. Nifty closed at 22,040. It has gained 258 points, that is 1.19% for the week. Nifty is able to sustain about 22,000 level. So this has crossed the crucial resistance and it is a good sign for the bulls. Bank Nifty has closed at 46,384, gained 750 points. That is 1.64% gain for the week. Mid cap index gained around 242 points, closed at 49,131, gained about 0.5% for the week. Small cap index lost about 75 points and closed at 16,194. India Weeks has pulled down a bit. It is at 15.22. It has lost about 0.23 points, down by 1.49%. So reducing volatility in the market is a good sign. Now let us look at various sectors. Most of the sectors have gained during this week. The rally this week was led by the auto sector on the back of good auto sales for the month of January and quarterly results by auto companies were also very good. So due to all these things, auto index gained about 4.33%. Public sector companies continue to gain. The public sector index has gained 2.77%. PSU banks dream run still continues. PSU banks gained 2.74%. Oil and gas sector gained 2.71%. Manufacturing sector gained 1.87%. Energy sector, private banks, pharma, NBFC, infrastructure, healthcare all gained more than 1%. Only three sectors, that is metals, media, and FMCG, were having small losses during the week. Now let us look at charts. This is the daily chart of Nifty. As we can see, the band has been crossed on the upper side and Nifty has taken out the resistance of 22,000 and closed about above 22,000 levels. So this is a good sign for Nifty, and since it has broken out of this range, there could be further rally in Nifty in the coming week. This is the chart of Nifty Mid Cap Index. If we look at the chart, we can see whenever there is a fall in mid cap index, the buying is coming at the lower level, and now it is approaching this long term trend line. And if it sustains above this trend line, we'll see further rally in Nifty Mid Cap Index. This is a chart of Nifty Small Cap Index. The small cap index has already crossed the long term trend line and it has sustained above long term trend line. With a positive sentiment in the market, Nifty small cap index may retest further all time high of around 16,500. This is the daily chart of Bank Nifty. Bank Nifty is still below the major resistance level of 47,200. So for a meaningful rally to come in Bank Nifty, it has to cross this level. On the lower side, we are seeing buying is coming at around 45,000, and whenever it is approaching around 46 to 47,000, in that band, we see selling coming in the Bank Nifty. So now Bank Nifty is trying to approach and cross 46,000 level. So if it sustains and able to cross 47,000, then we'll see further rally in the bank. Now let us look at the valuation metrics and fundamentals of the market. The quarterly results season for December quarter is over. The result season started around 10th of January and it ended by 15th February. During this period, there was a rally in the market. So we will analyze and try to understand the valuation of the different indices. Nifty is presently trading at 22.76 PE level. At the start of the earnings season, the PE was much higher, that is 23.05. Despite the Nifty going up by 422 points during this 1.5 month time, the valuation has come down. This is because of the impact of the earnings, that is the earnings per share of Nifty company. On a price to book value basis, Nifty is trading at 3.86 of the book value. So on a book value basis, Nifty is a fair valuation. And if we take 1 year forward earnings of around 15%, estimated PE for next 1 year is at 19.6. So if we consider the historical valuation level, Nifty is slightly on a premium side, but the valuations are not very expensive at this point of time. Mid cap index PE was 25.14 before the start of the earnings season, and now it is trading at this mid cap index is trading at 25.53. Slightly, the valuation has gone up. On a price to book value basis, Nifty mid cap index is trading at 3.93 times the price to book value, and 1 year forward P is 21.7. So mid cap index is definitely trading at a premium valuation. Nifty small cap index valuation was 29.62 before the results. Now it is 29.2. It has slightly come down, and on a price to book value basis, it is trading at 4. 1 year forward PE of small cap index is 25.18. So both Nifty mid cap and small cap indices are trading at a premium zone. Investors need to exercise caution while investing in mid and small cap sector. Bank Nifty index was trading at 16.28 P value at the start of the result season. Now it is at 15.4. So definitely the PE value has come down. So this shows the earning impact of Bank Nifty company. So banks have probably given a very good earning season. Due to this, PE value has come down. Banking is a leverage sector. That is why we see the market is not giving higher valuation to the banking sector. Banking sector generally trades at around a PE valuation of around 14 to 15. And 1 year forward PE valuation of Bank Nifty is 13.84. On a price to book value basis, it is 2.7. So Bank Nifty is still not very highly expensive considering 1 year forward. People can look at investing in good quality banks. To sum it up, Nifty has gone up by 422 points. PE value has decreased. Nifty mid cap has gone up by 2024 points. PE value has slightly increased. Nifty small cap index has gone up by 838 points during the earning season. PE value has gone up. Bank Nifty has lost 1054 points during last 1.5 months. PE value has come down. So PSU banks have rallied a lot in last 1.5 months. Private banks have consolidated, and leader among the private bank, that is HDFC Bank, has corrected. HDFC Bank price has come down after the results. So this is all from the valuation point of view and the impact of earnings on the valuation. Now let us look at other fundamental parameters of the market. IIP data for the December 23 has come out, and IIP growth is at 3.8%, which is considered to be very good growth. So this shows that core industrial sectors, there are 8 sectors considered for IIP. All the sectors are showing growth. Wholesale price index based inflation has come for month of January 24, which is at 2.7%. So RBI in their recently held bi-monthly meeting have not raised the interest rates. They were confident that inflation will start coming down. So this 2.7% WPI is in line with the RBI estimates. USD INR rate is at 83.02. It is quite stable around that level. And dollar index is also at 104.2. Trouble in Red Sea areas continues. Houthis are still attacking cargo ships. This will result in crude prices going up and freight charges going up globally. Brent crude price is at 81.93 per barrel. So another thing is there is no solution in sight for geopolitical situation in Israel and in Ukraine. So this geopolitical situation is also another overhang on crude price and other commodity prices. Gold price is studied at around 61,832 for 10 grams 24 carat. FIIs have sold 6,237 crore during this week, and DII have bought 8,730 crore during this week in equity. So continued DII buying is holding up the market. So we have seen the impact of results on the valuation of the market. The market is fairly valued considering 1 year forward earnings of the companies. Investors have to keep a long-term view and they should pick quality companies and invest in them. Mutual fund investors should continue their SIPs. SIP is the best form of investing in mutual funds instead of putting lump sum amount at one point of time. India's GDP growth is going to be quite good for the next 2 to 3 years. Investors should continue their investment so that they will get the benefit of higher growth rates in Indian economy and the markets will go higher, which will give good profits on the investment. This is all for this week. Like my video, please subscribe to my channel. You can ask your questions. We'll meet again next week. Thank you.